Hello guys, my name is Siddarth Shetty and I welcome you all for another learning video where we are going to discuss on the continuation of support and resistance. So in this video we are mainly going to discuss on how to identify the different types of trends. So without wasting much time, let's directly jump into it. Alright guys, so let's begin this video. So basically there are three types of trends. The first one is the uptrend, followed by the downtrend and the sideways. So if the market is going high and high and high, so as being a common man we tell that the market is in a uptrend, and similarly the downtrend. But technically how do we call if a stock is going upside? How do we technically call it that the stock is in a uptrend? Let us try to understand. So let's imagine that the price is going high, something like this. Okay, so whenever a stock wants to go up, it never shoots up just straight line. It always goes in a zigzag manner, something like this. So what we are going to do is that we are going to join the first and the second point, that is the support, and we automatically get the third. So something like this. And similarly on the resistance side, we are going to join the first point with the second, and we are automatically going to get the third. Now this might be a different, like there are basically different types of pattern, but as of now let's stick on to a normal simple trend line. So you can see here the shape of the trend is upside, so we can simply call this as an uptrend. But technically, if I would say, what we have to observe here is that, let's say this is one wave. All right, so this is high of the wave and this is the low of the wave. Similarly, when the price goes up to form the second wave, this becomes the high of the next wave and this becomes the low. Now if you observe, this high is higher than the previous high, so we call this as a higher high. All right, and this low of the wave is higher than the previous low, so we call this as a higher low. Similarly, the next high of the wave, that is of the third wave, is higher than the previous high, so this becomes the higher high, and similarly higher low. Now if you are able to spot higher high and higher low formation in any stock or any script, then we can technically tell that a stock is in a uptrend. So what you have to do when you see a stock in a higher high and a higher low fashion is that, when the price comes near the higher low, like let's say the price takes a resistance, and when the price comes near higher low, you have to initiate a buy, and your target will simply be the higher high, something like this. So you are expecting that the stock price will touch the resistance that is at the higher high. So that is about the uptrend. Now let's go to the next one, that is the downtrend. So in downtrend, as the name itself says, the stock is falling. But again, remember, the stock doesn't fall straight away like this. It always falls in a zigzag manner. So something like this. So what you're going to do is that we are simply going to join the resistance on the top, something like this, and also the support, something like this. All right, now if you see, let's consider this as the first wave. This one and this one becomes the first wave. So we can see that this is the high of the wave, and this one, the bottom one, is the low of the wave. Similarly, the high of the second wave is this, and the low of the second wave is this. Now since this high of the second wave is lower than the previous high of the first wave, we call this as lower high. And since the low of the the next wave, the preceding wave, is lower than the previous low of the wave, we call this as a lower lows. So technically, if we want to call a script is in a downtrend, we have to spot a lower high and a lower low formation. So what we have to do here is that, downtrend market, let's say if you want to short a market, whenever the price comes near that upside trend line, that is the resistance that is at lower high, we are simply going to short it, and we are going to buy when the price comes near the lower lows. Or you can even do vice versa. You can initiate a buy at lower low, and you can simply keep your target as a lower high. So that's about downtrending market. Alright guys, so let us go to the third type of the market, that is the range bound market, or we simply call it as a sideways market. So what happens in a sideways market is that the price will simply consolidate in one particular range. So in this case, what we are going to do is that we are going to join the support of the wave, and we are going to join the resistance of the wave. So what we are going to do here is that we are simply going to buy at the support, and we are simply going to keep the target at the resistance. So we know that when the price comes over here, this was the previous support, this point was the previous support, so it is expected that it will reverse from here. So we are based on the trend line or the horizontal support, we are going to buy, and we can set our target based on the previous resistance. Okay, so whatever we learned so far in the theory, let us try to replicate and see if same thing works even in the stocks. So going to TradingView, and the chart shown here is of ITC in a daily time frame. So what I have done here is that I've simply joined the first support along with the second point of the support, and automatically I got the third one. Similarly, I have joined the first resistance point with the next one, and similarly I have got the third one. Now what can we do as being a trader? Now if you deeply observe, like looking at the pattern, you can tell easily that the stock is in an uptrend. But technically, how do we tell this? Simple. Let's say the wave started over here and it took a resistance, so this becomes the high of the wave, this becomes the high. And similarly, when the price started to reverse from this point, that is at the support, we call it as a low. Now the next high was somewhere over here, and since we know that this high is higher than the previous high, we call it as a higher high. Similarly, if this low is higher than the previous low, then obviously this is a higher low, and the fashion is being continued. Now how do we trade this? Simple. When the price comes near the higher low, we're going to buy over here, and our target will be the next higher high. Now is it very hard to predict which will be the next higher high? No. You know that you are simply going to draw the support trend line, and because of which you can able to buy, and the resistance trend line, because of which you are able to sell. Alright guys, so now let us move on to the next type, that is the downtrend. So the chart shown here is of Tata Steel in a daily time frame again. So what I have done here is that I have joined the resistance from one point to another point, and I automatically got the preceding resistance. And similarly, in the bottom I have joined the support from one point to another point, and thereby finding the next points. So in this case, if we neatly observe, we can see that the price is slowly coming in a downtrend. Now by looking at it, we should have understood that it's in a downtrend, but technically what we have to find out is that this is high of the wave and this is the low of the wave. Similarly, the next high is lower than the previous high, so this becomes lower high. Similarly, this low is lower than the previous low, so we call it as a lower low. So technically we can tell that the stock is in a downtrend, after which there was a breakout from this channel pattern and the stock boomed. So this is an example of downtrend market. Going to the next type of the market, the third one, that is the sideways market. So the chart shown here is of Infosys in a daily time frame, and we can see that Infosys has been consolidating for some time here. So the price has not really given a very huge move either side, and this ended up as a support region, that is around 1600, and the minor resistance would be somewhere around this point, that is 1800, and the major resistance, that is the all-time high of Infosys, is around 2000. So in sideways market, what we're simply going to do is we're going to buy at the support and we're going to keep our target at the resistance. So that's so simple in sideways market. Going to the next type, next example for sideways market is of Bandhan Bank in a daily time frame. So Bandhan Bank, again simple analysis, you can see that the Bandhan Bank was consolidating in this particular range. The range is from the support is at 400 up to 634 somewhere, and after that there was a breakdown of the support, and next time the new support was formed. The first strong support was at 160 somewhere, and then it took one more important support near 246, and thereby the price started consolidating. Now if you have seen the basics of support and resistance, I mentioned that whenever the support breaks down, the next time when the price tries to retest, this will act as a resistance. So now the Bandhan Bank has been consolidating in that particular range. So in this case, what you're going to simply do is you're going to buy at the support, that is at 242, and you're simply going to sell at 409. But remember, it is not that you buy support and directly next day it keeps going high and high. No, it can go up, again come down, go up, something like that. So what you have to do is you have to just initiate a trade, or you have to be active only near the support and resistance. Between that, you either have to take your stop loss or you simply have to be patient with your trade. So that's all. I'll see you in the outro. So that's it guys for this video. So I hope after watching this video you are able to identify the market trends based on the highs and the lows. So for more such videos, make sure you subscribe to this channel so that you do not miss out any important learning video. So that's all for now. Happy trading. Thank you.